Hey guys, welcome to the Max Invest YouTube channel. In today's video, we're going to be doing an Ethereum yearly rewind. I'm going to be going over some of the big news and the big trends that happened over the past year with Ethereum. Of course, in my opinion, there were a couple of big trends. One of these big trends was decentralized finance, another one was NFTs, and another one was layer 2s. This was a breakout year for DeFi, NFTs, and layer 2s in the Ethereum ecosystem, and I will be discussing these today. There were also some other bits of big news and big upgrades that happened throughout the year. Of course, if you enjoyed the video, remember to like and subscribe to the channel. Follow me on Twitter, join the Discord, and remember, nothing in this video is financial advice. The first thing to talk about is that this year was a breakout year for Ethereum. We have roughly 175 million unique addresses that are on the Ethereum network. Of course, it's important to remember that most people have multiple Ethereum addresses, so I would assume this number is probably closer to 30 to 40 million, however that is just speculation. Now, in the past year, tons and tons of individuals have started using the Ethereum network, so much so that Ethereum's gas fees have gone through the roof. Of course, Ethereum's gas fees are basically a market-based system. The more people that are using the Ethereum network, the higher the gas fees are, and vice versa. So we do know that this year Ethereum attracted a ton of demand, and this was probably more demand than what anybody was expecting. So why did the Ethereum network have so much demand this year? Well, the first big reason for this was a bit of an NFT boom. Now, I've talked to a lot of Ethereum people and nobody really saw this coming. Essentially, a non-fungible token on the Ethereum network represents digital ownership of an asset. NFTs can be used for a range of different things such as house deeds, legal contracts, video game items, or even digital art. This year there was a breakout in NFTs that are based on digital art and NFTs that represent items in video games. As we can see, one NFT of a digital art piece sold for $69 million, which is an absolutely massive amount, and it shows that there were a lot of artists who were adopting NFTs, and there were also a lot of speculators who are trying to make money through NFTs and through this use case. As we can see, if we look at the weekly trade volume of NFTs, they skyrocketed this year. NFTs have been around since 2017, however, if we look at this chart, we can see that there's not even a dot except for one tiny dot back in 2018. The entire chart is completely flat, and then when we look at the trading volume this year, we can see it was absolutely astronomical. We can see that there were at some points $1 billion worth of daily trading volume for both art and collectibles and gaming NFTs on the Ethereum network, and over the past few months it's probably averaged around $250 million worth of NFTs traded every single day, which shows a really big breakout in the use cases and a breakout in the amount of people using NFTs. Of course, this led to some NFT games going absolutely crazy. The biggest NFT game is Axie Infinity, and as we can see, in the past year, Axie Infinity have $3.6 billion traded on their platform, and one Axie was even sold for $820,000. So, NFTs was really a use case that took a lot of people by surprise, and it was one of the reasons that Ethereum had so much network activity. However, NFTs are still nowhere near the biggest use case on the Ethereum network. The biggest use case on Ethereum right now, and this has always been the biggest use case for the past 2 or 3 years, is decentralized finance. And as we can see, Ethereum had a breakout year in DeFi. Ethereum went from roughly $20 billion locked in decentralized finance to over $100 billion at many stages, and even nearly $125 billion. So this shows that tons and tons of different individuals are using the Ethereum network for decentralized finance. Of course, there's tons of different applications that we can use on decentralized finance, such as Aave, Curve, and more, and there's tons more different use cases that continue to come out. Now, in 2021, there was also a new type of DeFi that came out, and a lot of people labeled this as DeFi 2.0. Essentially, what DeFi 2.0 did is it meant that the protocols own the liquidity, and this basically meant that mercenary farmers can't just come in, farm the token, dump the token and leave, as the protocol owns all of this liquidity. So we saw some DeFi applications such as Olympus DAO and Tokamak go absolutely parabolic in the last year, which I did find very, very interesting. Of course, if you look at the performance of a lot of the decentralized finance tokens, you can see that most of the original DeFi tokens didn't do that well in 2021. However, a lot of tokens such as Olympus DAO, Tokamak, and all of these new DeFi tokens went up over 100x in the year, and it was a very big and breakout year for this new type of decentralized finance, which I do find quite interesting. Of course, we do know that DeFi and NFTs led to a lot of demand for the Ethereum network and a lot of people using it, and as a direct result, Ethereum earned roughly $30 to $50 million in fees every single day. In fact, Ethereum was even earning up to $100 million in fees on some days, which is absolutely insane. Of course, this shows that there's massive network demand for the Ethereum network, and the next closest competitor is unbelievably far away from Ethereum. Ethereum is absolutely destroying the competition in fee revenue, and I do love to see this. Of course, with this, as I've already said, the average transaction fee went up to over $20, and more complicated smart contract executions could cost up to $100 for individuals, which is something we are trying to fix and something I will discuss later in this video. Now, I do also want to talk about one major upgrade that happened in 2021, and this was probably one of the most highly anticipated and large upgrades in 2021, and it was EIP 1559. Essentially, EIP 1559 did a lot for the Ethereum network. Now, the first thing that EIP 1559 did is it changed Ethereum's fee structure in a way that would smooth out the volatility in transaction fees. This doesn't necessarily lower transaction fees, however it lowers the volatility, which is of course very good for the Ethereum network. However, another thing that EIP 1559 did is it introduced a burn mechanism into Ethereum. This meant that part of the transaction fee is burned every single time, which in turn burns more and more Ethereum. It makes Ether deflationary and it gives more value back to the current Ether holders, which is very good to see. Roughly $4.5 billion worth of Ether has been burned in the last year, and it shows how influential this upgrade has actually been on the Ethereum network, and this was definitely probably the biggest upgrade in my opinion that happened in the last year. The next big thing that happened on the Ethereum network is the evolution of layer 2 scaling solutions. We do know that Ethereum has been planning for a while to not scale via the layer 1 and scale via layer 2s and roll-ups. Of course, what a roll-up does is a roll-up will actually compute the transactions off-chain, it'll send a proof of this computation to the main chain, and it should mean that this roll-up inherits Ethereum's decentralization and security, and is in turn a lot faster, which is of course very, very good. Now, we saw roll-ups get up to roughly $7 billion in total value locked, and they've ended the year with around $5.68 billion in TVL, which shows that there's been some absolutely massive growth in roll-ups. As we can see, the biggest roll-up this year was Arbitrum, and Arbitrum did get a ton of use in the past year. It has $2.5 billion locked in it. Now, Arbitrum is a generalized optimistic rollup, so it's got a lot of different applications in it, and I do expect to see optimistic rollups perform even better next year. I would expect that some of our favorite optimistic rollups like Arbitrum and Optimism will release tokens next year, and they'll start to get an even bigger ecosystem, and I would expect that rollups have roughly $50 billion locked in it next year. Of course, another big thing with layer 2 scaling solutions is that ZK rollups did very well. Of course, right now there is no ZK EVM. This means there are not zero-knowledge rollups that have generalized applications on it and generalized solutions on it. However, there are application-specific ZK rollups. Immutable X is an application-specific ZK rollup that's designed specifically for NFTs and NFT games, and DYDX is an application-specific rollup that's designed specifically for trading. Now, if you want to use these rollups, you can basically use them with 10-cent fees, and they're very efficient and very good to use, which is what I do love to see. So rollups definitely had a massive year, and this year we did see rollups going from theory to practice. In 2020, there really weren't any rollups or layer 2 scaling solutions. However, in 2021, we saw a lot of rollups actually come onto market. Of course, none of these rollups are anywhere near their final form. These rollups still need tokens, these rollups still need centralized exchange bridges, they need incentives programs, they need decentralized sequences, and I do expect all of this to happen in 2022, and I expect this ecosystem for rollups to continue to take off. So overall, it was a very successful year for rollups in my opinion. I do think people had overinflated expectations of what rollups will do in 1 year. Of course, they're not going to come along and immediately obsolete every single other layer 1. I do think that this will probably take quite a little bit more time until people realize that rollups are the way. Now, one other big bit of news over the past year that I wanted to discuss is a bunch of different companies started using the Ethereum network. I'll quickly go through what some of these companies are doing. Visa bought a CryptoPunk on Ethereum, and Visa also said they might do payments on top of the Ethereum network, which would be absolutely massive. Credit Suisse are tokenizing stocks and they're tokenizing bonds on top of the Ethereum network. The European Union are tokenizing bonds on top of the Ethereum network. Reddit is using Ethereum for community points. Microsoft is using Ethereum for copyright. And Budweiser, Adidas, Disney, TikTok, and Discord are all either using or planning to use Ethereum for NFTs. So this was a breakout year with companies using the Ethereum network, and I do expect a lot of these companies to start using Ethereum more and more. Right now, about half of these are using Ethereum for NFTs, and I do believe that most of these companies will find an even bigger use case for Ethereum. They'll start processing transactions on Ethereum, storing data on Ethereum, and actually storing digital items as NFTs on top of the Ethereum network that are more than just digital art. So, I am expecting us to continue having a wave of companies using blockchain and adopting crypto, which will be very, very good. Now, the last thing that I wanted to discuss for the Ethereum Yearly Rewind is last year, or in 2020 now, the Beacon chain was released. However, this year we saw tons and tons of people staking their Ethereum on the Beacon chain. As we can see, roughly 8.5 million Ether is being staked, which is somewhere around $40 to $50 billion worth, which is absolutely massive. We do know that the Ethereum 1 and the Ethereum 2 chains will actually merge next year, and Ethereum will become purely proof of stake, and at this point I do expect even more Ether to start to be staked on the network, which is going to be very good for the price of Ether and very good for the general health of the network. So this was a bit of news over the past year that I did find very, very bullish. Anyway, this brings us to the end of the video. I was a little bit sick in today's video, however I did think that I would try my best to record it anyway. Of course, if you enjoyed the video, remember to like and subscribe to the channel, follow me on Twitter, join the Discord, and thanks for watching the video.